Thank you, Garima. Thank you, panelists. We'll move quickly on to the next panel. If I could just invite Viraj Kulkarni, who will moderate this panel. This will be on FPI, Foreign Portfolio Investor regime. So I think we have probably our largest panel here, so we probably need another chair as well. So if you just give us a few minutes. Just a reminder that there is another stream taking place on banking. So this one's on FPI, and then in the other room it will be focusing on the MPA and fraud. So if anyone wants to do a swap out, probably now is a good time to do that as we mic up our guests here.
We're not getting into the regulations. We're not going to get into which are the sections, etc., because it's given that people in the room are experts. And so my question is basically this particular budget has been a bit of a change, as in it has increased the limits for foreign portfolio investors. It has also clarified on a few things. If I take the safe harbor route and all those stuff. And also has talked about the GAR and MAP. In the backdrop of this, where do you see the investors' interest? Because this morning there was also a discussion that money, because of the tax aspects, maybe the investors are looking into the other markets. It dissuades. But for the first time, I've actually seen some clarifications come on to it, trying to ease it. Do you really see a easing of India? And yeah.
Thank you, Viraj. So basically, if you look at the journey of FIIs, FPIs from 93 till now, I think NSDL will surely have the numbers, but what I know of from 93, it was just 13 crores. And now it's like 2 million crores of investments done by FII. So surely they see a market, and there's a lot of development. And our government has been very proactive. So if you look at the budget, they have clarified, like was discussed in the earlier session on securitization, which was a major issue, was tax, which was not taking off the entire industry. So government has looked at the representations made, has considered, and has given a very good amendment which has been done. Earlier session, they even discussed masala bonds. Now government has released a press release saying they will like to tax at 5%, but somehow it has missed in the budget. So some things like this also have happened. GAR, which is a very major issue, because we have the second largest investment coming into the country is from Mauritius. The first is from USA, but the second largest is from Mauritius. And then you have Singapore, and then you have other countries. So GAR, the government has reiterated its commitment to say that GAR is not going to be postponed. So FPI, so they are very good now. They're giving us enough time to structure our investments into India. And they've said that it's from 17 going to come in. And they've reiterated that. So they've given enough time to the industry to structure their investments. So I think in that way, they're very positive. You can actually see a lot of investments. And opportunities, if you look at investment opportunities, I think IFC is going to be the next big thing for India. The way they've given exemptions for IFC, like capital gains, no STT. Because otherwise, when you're doing equity in the Indian market, you at least have to pay STT if it's long term. Now, STT is not going to be there. There's no CTT, no long-term capital gains. The units in IFC is going to get exemptions. So I think IFC is the next area which FIIs and FPIs would be looking at. The second area is securitization. Debt is something which government is encouraging. And they have done this by giving a 5% lower rate of tax. So they were even evaluating, because this 5% rate actually ends in 2017. So should they be looking at extending that, or should they be giving some sort of clarification? Maybe the next budget is something which they'll look at, but I think our government has been very proactive and very responsive to the ask of the FIs and FPIs.
And your thoughts on the safe harbor clarifications as well as opportunities. Nehal, do you want to take that?
So safe harbor, if you're looking at from the transfer pricing perspective, then of course there are safe harbor rules, but transfer pricing by itself is another area of the largest litigation which may come about. But it will not affect the FPIs. That is what we believe. The FPIs should not be affected by the safe harbor. But the only question now what the FPIs will have to look at is the country-by-country reporting if they come within it. But generally from a tax perspective, FIIs and FPIs have been outside the purview till date from transfer pricing perspective.
So I think I kind of mirror what she said in terms of the government being very proactive and being predictable in terms of its policy. There are no surprises and there is a roadmap given. And I think that's a very important jurisprudence as well as governance strategy which the government is going forward. That it is laying down in a very structured way that what its vision is and then following it up with a mission as well as year-on-year targets on as to what they propose to do. So there is a big picture as well as a mid-term picture and a short-term picture. It gives a lot more comfort to investors coming in because most of these investors, though FIs have got that bad name of giving really short-term money or hot money, but most of these sovereign funds, especially, if you see the composition of the FPIs, it's not that many hedge funds, it's more the long-only funds, the sovereign funds which are coming in. And these are really the long-term guys, and they need that kind of look ahead in terms of the policy perspective on where India is moving. And that's where I think that government has really hit the nail on its head by giving that kind of a roadmap in giving its strategy for the next 3 to 5 years. The second point, which I think is extremely important, is that the world is going through a big, it is in probably one of the most difficult times which we have witnessed in our lifetimes and probably we may witness in our lifetimes. It's a combination of political, socio-economic issues happening simultaneously. And in these situations, India really stands out as a bright spot. It has been testified by the world organizations, be it the IMF or various other multilateral agencies. But it's also supported by the macro pictures, and therefore the fiscal tightening which the government has ensured has also given a very positive spin to the entire India story, that they are in control of things. It's not going into a debt trap. And the third thing is that really easing the rules, especially for the investments to come in, and whether it be the Make in India campaign or the new companies which can come in and start up in India, to really the ease of investments from an FPI standpoint, the registration process which has been simplified over a year ago. But that policy perspective has taken forward to the next level by following up with the simplicity and predictability of the tax proposals. So it started off with really the access issues which were a huge issue for over a decade, which got sorted out a year ago. Then there were the tax issues which were a huge issue. Those have got sorted out. And third is they're increasing the limits which these FPIs can come in. And you know, we tend to kind of neglect or don't give it the requisite importance. But the merging of limits of FDI and FII, in my opinion, is a huge step in simplifying things. Because then
Absolutely.
you are not being, it is, you know, like that famous ad of Pepsi which was there, in which this guy is thirsty and he goes to a Coke store and he says that I'm thirsty, I really want a Coke. So he asks him which kind of Coke. You know, he goes through some various iterations and they say just forget it, just give me a Pepsi, because Pepsi is only one. So that's the kind of ethos which is coming in. That rather than getting into the multiplicity, that if your FDI has separate limits, if your FII has separate limits, sub-account, you have separate amounts, all merged into FPI. And that, I think, has a huge imperative both in terms of the simplicity of access and the taxation. And the last point before I really have my comments is that the government also recognizes that corporate bonds is the next big thing. So though equities, the limits are kind of reached the hilt in most top companies. corporate bonds is where they've started giving, and the government securities limits also is something which they're looking at. So I see that as a big icing, because a lot of these long-only funds would like to come in both in terms of equity and debt to kind of hedge their portfolio and not be in one asset class.
Interesting. No, I agree. I think just before I bring in Rajan onto the same subject, something that I've experienced is our regulators listen, and not only they listen, they just are very unlike some of the other places that I've seen, they're very proactive in bringing about changes. So you really put it very beautifully as to how the blocks were put together to build a building. I think it's a great way of saying it. Rajan, your thoughts?
Yeah, I agree with what the other panelists said. So they have comprehensively covered the tax part of it. But in general, from the government as well as the regulators, the approach has been to simplify the process and take feedback and take measures to find measures to make things simplified. In fact, I can share some of the views that we have had experience with the clients when clients ask us how easy is it for us to get registration and get into investing into India. I said, just come over to India in a week's time, you can start investing. This is, how is that possible? I said, it is possible. You don't need to go back to the regulators now. You have intermediaries set up. You can pose your questions in advance to them. Get all preparedness well ahead of before you launch a fund or any other structure. And since these are intermediaries who are having competition from the market side also, their turnaround time is reasonably quick. So all put together, the investors' response is quite surprising that things have overnight changed so dramatically that you could think of actually hitting the road in no time. And the other positive development from the regulators that we see is they have come up with such detailed guidance in such a way that there is so much of transparency in the system, so there is nothing left to if and but. The investors really know what is it that they have to be prepared. So in fact, the true reflection of that is the FAQs that are issued from the regulators. I think they came up with 3 or 4 versions, and we have more than 150 plus questions addressed in that, detailing each of those scenarios. In addition to the FAQs, you have the ability to go to those intermediaries and get also inputs on how different situations it will be handled. So this has made life quite simple for the investors who are planning to come into India. And as Viraj rightly said, the numbers of 4,000 plus and 1,700 in last year truly reflects that things have eased up so much. I don't have the statistics to compare what was the numbers like when it was directly handled by the regulators versus what the intermediaries have been. So I would say the process has got simplified. They are willing to hear what we have to say. They open up forums to hear what the views we have. They have been open to inviting diverse crowd different segments from the market to hear what their views are instead of getting views from single corners and trying to address that. So those are the productive developments which I can say that they have been, just to tell you the noise that has been in the marketplace. As far as the post-budget reactions from the clients that we generally talk to, normally there are, whenever there is anything spoken about GAR, there is huge hue and cry, anxiety. This time around, there wasn't so much of noise around it or sudden rush by the investors because of their anxiety factor, not because they have any certainty about what is happening or what is going to happen, but they simply decide to sell when a GAR a name is mentioned. We haven't seen anything like that this time, or too many questions on those kind of stuff. That's a positive development that I can say, but I'm not able to comment where they have got a certainty over what kind of roadmap do you have for GARD. I would leave it to Bahroze and others to say about, but that, but this is what I can talk about, the noise level that we have seen and experienced.
Right. Thanks. I think one of the things is, it's become, the country's become more predictable. Earlier there was always this issue about, you had Vodafones and all those as stories. But today, if you look at it, it's becoming more predictable, becoming more standardized. And to that extent, I think, the investors, as we heard the previous session say, the investors, the long-term players are more assured that this is the country where we want to put our money. And, touching on Rajan's point, if I have to use a number game, ex-banker, that's what happens with us, is we had, till FPI regulations came in, we had about 8,800 foreign institutional investors in the country in the last 2 decades. And they were called the FIs, and what we famously call them as category 1 and 2. But if I look at just this year, in the last 18 months, we have 1,700 new foreign investors who have come into the country, which is a huge jump if you look at it from that perspective, and quite a lot of them from the category 3, which means there is a confidence about the country and a lot more, interest. I'll like to then, move on to our next question, unless somebody wants to add a piece to this question. Anybody wants to join?
Yeah, in fact, the responses from family offices and the likes, when we say that you can now come to India without too many conditions attached and get a registration, is quite a welcome response for many managers or relationship managers who handle family offices and the likewise. So that has been well received by the International Advisory Committee in terms of opening up, and we see those kind of clients showing very active interest, though to start with they try to come in small numbers, but that has been a very good initiative, and the risk categorization of the process also has been well received.
All right, thanks.
If I may just add here, so basically just seeing the numbers, though there's a lot of talk, you do have category 3, which is the broad-based fund, who's the largest investors, if you look at numbers, followed by mutual funds and then the sovereign funds. But if you look at family offices or individuals, based on the statistics which is there in NSDL, there are no family offices which are registered category 3 as of yet. And there are only 3 individuals which are there. So I don't know what the panel has to say on that, as to when do we start seeing family offices and individuals coming in?
Okay. If I can just...
Yeah. No, I think the concept is still trickling down into that space. But what I'm saying is we normally are contacted by the advisors in the international space who ask whether are these eligible, and when we tell them that yes, indeed they can come, they initially say, are you certain? So can you reconfirm? So that is normally the response or the reaction from their side. So I think they are still yet to get comfortable with the fact that yes, indeed the doors have been opened up and then they are eligible to come. They still look at it with a bit of suspicion. Are we giving the right answer or not? So I think that could be the situation, but we do have heard queries from quite a lot of people, and when we have confirmed to them, they wanted to look at it actively.
I think if I can just, do you want to say something?
No, I just wanted to react to your question, is that besides what Rana said about it getting trickled down, I think there's also a different regulation which is applicable to category 3. And it's more intrusive, and rightfully so, because the concerns, especially on money laundering, the concerns on their sources of finance and not being strictly regulated entities, is something which obviously entails more diligence to be done by the intermediary who is going through that. So I think that typical question is that should I become a participant in a mutual fund and then go into a collective thing, or I would rather go directly into the country? Is a dilemma, and that's the cost comparison and the regulatory comparison which one would go through before you would kind of.
I tend to agree with what has just been said. as lawyers, we've also received a lot of structuring queries, but the level of inquiry and the level of detailing that needs to go in terms of documentation, in terms of information that needs to be supplied, has led to a lot of people kind of backtracking and saying, we didn't anticipate that you need so much information. And so a lot of people are actually also exploring pooling vehicles. So maybe if there are advisors who are advising multiple family offices, then we have told them to consider a pooling option for various family offices to come together and then seek maybe registration or maybe investment through the offshore derivative instrument route instead of coming in directly. So these are things, but yeah, as you rightly said, no one has really probably still come in directly as individuals. That's something to look forward to.
Yeah, I think a few thoughts I'd like to share is basically, globally you have two formats, the omnibus structure and the segregated structure. And family offices and individuals really do not come, I stand corrected. Individuals do not come into a country directly. So, and I'm using an example, which is, let's take Singapore or even Switzerland. Switzerland is the house or the country where wealth is managed. And no individual goes to another country, and especially if somebody has to, invest into India, the first thing he thinks is the hundreds of documentation, the settlement system, because this is one of the countries where you have multiples of everything, 2 exchanges, 2 depositories, 2 everything. So there's an operational aspect there. So in my opinion, if you're looking for individuals to come into the country, it doesn't happen anywhere in the world. What wealthy clients do is they go to a wealth manager who then says, look, I have a basket of countries, where do you want to invest? And that's where investments happen. So family offices trust. And if it's a wealthy guy, they normally have a trust. Now the process is category 1 and 2. For 20 years, they discovered this market. They were institutions. They understood everything. Category 3 is the small offices, etc., who are testing out. So it takes about 6 months to 9 months before somebody starts understanding a country. And I think the positive news which is coming out of the system that, yes, this is free, documentation is reduced. And a lot of good work has been done by, the institutions or the segments that, our panels represent, whether it's custodians, bankers, lawyers, everybody's putting out a positive news. And in that regard, I would like to compliment a lot of people in this room who I know have been pursuing FPIs, educating them. So category 3 basically needs education, and that is where, the sound bites that we are sending out is the right direction. So I think it's time, soon we should start seeing them firing. So that takes me to the next one, which is for Anand, Sayantani, and Prashant. Costs. Whenever we talk over foreign portfolio investor, the first thing he says is cost. So, the lack of interoperability between the exchanges, the clearing corporations. We have interoperability between the depositories, but one is the lack of interoperability, basically margins, etc., has a cost. Time to market, recently I had an investor, a very large investor coming in and telling me, it takes me 24 hours to come into your country, but 2 weeks to invest into your market. I'm taking a small example of a PAN card. And e-visa, thanks to the Modi government, is, within this gentleman was able to get a visa into the country within 24 hours. But once he came into the country to invest, he had to wait for 2 weeks to get a PAN card. So, issues like this, documentations, as, Nehal mentioned, lack of outsourcing opportunities, the difficulty of accessing foreign markets, Indian intermediaries, when they're accessing the foreign markets, the difficulties faced, and higher compliances. Do you see these as showstoppers, or what do you think can be done to fix these, much faster, and so that we can enable access to the market? Anand, do you want to go first?
Thanks, Viraj. See, some of these things, they're not really showstoppers in the sense that they do not stop investors or FPIs from coming into India. But they do increase the time for them to start investing and also time to market. Some of these few things which immediately come to my mind is Modi government has opened up this e-visa and an ease of entry into the country, as you said. They could also look at looking at e-PAN kind of thing, so that normally now it takes about 2 weeks for the PAN to register, at least 2 weeks. I mean, maybe Bahroze can correct me if I'm wrong. But at least 2 weeks for the PAN to be registered and for him to get the PAN number and then start the process. Some kind of facility of e-PAN would help in getting the document maybe in 2 days or so after filling the forms and everything. So that will help in cutting down the time drastically. Because normally it takes about, after the PAN comes, then the other documentation starts, and it takes about month and a half at the earliest for him to start entering the market. This will considerably reduce the time. Another thought which is there is, normally these investors have to get the documents apostilled or notarized in their home country. Okay, this increases the cost and also the time for the investor to get this done. One suggestion was that maybe these documents could be self-certified, or they could be certified by a regulated entity there, let's say a broker or a banker or a CPA in that country, which could considerably ease the process and the cost for the investor when coming into India. These are two thoughts which immediately come to your mind from this discussion.
Thank you. Most of what I'd like to say has been covered by the various people here, but I'm going to focus on one specific thing, which is something that you already mentioned, which is costs. So, yes, it is, it is expensive, not just to get into the country and invest, but also to kind of stay. And that is something that perhaps needs a little looking into, because like we've discussed in the panel previously, corporate bonds are kind of the future, and all the investors are looking more at corporate bonds. Now, given that today FPIs can only invest in listed bonds, unlisted if it is in the infrastructure space. So if it is listed, there are certain costs to be incurred in keeping a bond listed. So to that extent, it becomes a little difficult for smaller companies to access this investor market. To that extent, there is a proposal in the budget speech, which is for us as lawyers a very exciting development, because FPIs can now hopefully invest in unlisted bonds as well. If that comes through, that takes care of a lot of regulatory hassles for all these smaller companies which are looking for FPI investments, and especially companies in the social impact space, MFIs, etc., which is something that we've been advising a fair amount. We've seen a fair amount of interest come in from, again, category 3 investors who want to invest in MFIs, in related companies in India. So costs, if the unlisted bonds become an acceptable instrument for investment, that would kind of give more scope, ease the process for us and for the FPIs. So that will be one development that we look forward to. But like someone else already said, we're not really looking at it as showstoppers, but yes, there are workarounds that are required. We hope those will come soon.
Yeah. Before Prashant comes in, there's another question that I have, and this is what you're talking about, the inflow. But a lot of frustration is faced by Indian intermediaries when they're trying to tap the market overseas to create awareness about it. For example, in the US, you cannot tap the US investor unless you are locally registered there. Now, these are areas where I guess a bit of hand-holding is necessary so that we can actually start positioning our country in the minds of other things. So what do you think?
I agree with you. Once the FPI regime, and especially when Category 3 was announced, we actually received a lot of interest from brokers who wanted to go out, who wanted to go market to various jurisdictions, and we had to tell them, you need to hold on for a minute because you need to register yourselves in whatever jurisdiction you want to go to, be it the UK or US or Singapore, be regulated as a financial intermediary there, and only then reach out to the people there. So to that extent, if there is any easing of the registration process, any easing of the compliance requirements that are, because one understands that one may need to still comply with the registration process and go register themselves as an intermediary, but easing that, some amount of rationalization that if you fit certain criteria here, then you will be granted faster registration as a financial intermediary offshore. These things will definitely help our people in reaching out to the investors and spreading sound bites about Category 3, like you said.
Thanks.
I can just add one cost angle probably that is to be rested with Nehal because it will come from the exchanges side. Today when an investor, a large investor is trying to churn their portfolios, let's say they have a 100 crore position, if they have to turn it out to another stock, it takes them 2 days for them to turn it around. That means you sell, wait for your funds to come to make the fresh investment. So it's for a portfolio change, churning, they are exposed to the market. So no fund manager would like to be exposed to the market if you are switching from one stock to another stock. You are waiting for the market on the second day. It could be up, it could be down. So if the fund manager wants to completely be neutral, they have to borrow that funds to make the buy the same day. Then there are FX costs involved. So how best you could actually, against a sell position, the proceeds that are going to come, if the client is able to buy his position, the most efficient manner. I'm not trying to compare it with international market. I'm not too familiar with how the operational cycle works, but in India you have to wait till the T+2 day for you to receive the fund, and that too by 2 o'clock or 3 o'clock is when the funds hit your account, by which time you have clear funds to be able to make your next purchase. So how can we make it? So that's a huge cost for the existing clients. So they all spoke about the procedural cost of it, which is a one-time one, but this is a day-to-day affair which every client is currently accommodating, but if it can be made more efficient, I don't have to also consider the risk management mechanism for the settlement guarantee funds and all other collaterals which are there to manage. So I know there are challenges around that, but it's time that we have to look at that to bring about reduction in the cost. Over time, we have brought about changes to the other associated costs, but this still remains as a huge cost in the trading platform.
I think it's a valid point, but I think the considerations have been slightly different. Why those kind of things have really been brought. One is obviously India is not capital account convertible, and therefore you have obviously to be in the money before you can invest into any further asset class as a foreign participant. The second is, yes, portfolio churning is one consideration, but it could also lead to really speculation. And that's why the regulators have been very wary, because FIIs have got themselves a bad name world over, being very heavy on speculation. And therefore, the policy consideration had been that, yes, we may lose out on the portfolio churning aspect, but at least we'll prevent the speculation from coming into the market, especially where foreign participants are concerned. And that can have a huge run on the country, it could have a huge run on your currency, and that has been seen in various countries, be it Brazil or be it Indonesia in the past, or Thailand very recently. So I think these, in my opinion, at least my personal opinion, not BSC's opinion, is that a phased approach, but a steady approach, where you have the long-term visibility, is a far better strategy from a country standpoint than really a big bang opening in bringing everything. So I think that's where I think the proof of the pudding is that today the FPI percentage is highest in terms of long-only funds, and these are the money which we need, rather than the hot money which wants to come in and go out very quickly.
Thanks. Prashant.
Yeah, I fully agree with the point about the cost which has been raised till now. But at the same time, when we look at the way the FPIs has been on boards in last 18 months, and many times it is mentioned in last half an hour that NSDL will be in the better position to talk about the many numbers. Some numbers Viraj has already quoted that more than 4,100 FPIs has been registered in the span of last 18 months, and more than 1,700 are the new registrations. In fact, when we look at that particular journey, the value of securities 18 months back has gone up by almost 25%. It is not only in terms of the value, the quantity of the securities held by the FPIs and the deemed FPIs has also gone up. So basically when we look at the journey in the year 2016 and where it says that it is a negative investment perhaps after the year 2008, in fact in the same time the February 2016 we have seen maximum FPI registration in last 18 months. So when we are talking at one place that the year is not good, but at the same time we are saying that at the same time there the more and more FPIs are coming on the board. Whatever the FPIs who have renewed their registration, that is also one of the way of they looking at India. If their registration is due for the expiry and if they don't want to renew it, that itself shows that they are no more interested in India. So that number though Viraj has not talked about, but there also we have seen there hardly any surrender has happened, and most of the people have renewed their registration in last 18 months. Now more important point is that 18 months whatever the renewal has happened, more than that renewals are due in the next 6 months. So probably next 6 months renewal will give us an idea what outlook the foreign investors are looking at India. When we look at the cost, in the previous panel also one of the point was discussed, and that was nothing but retail participation in the government securities. And again this is not the relevant topic at this forum because we are not looking at the retail investor, but in the view of the process to streamline the retail participation in the government securities, one of the things which is going to happen is nothing but that foreign portfolio investors will be able to use their government securities which is remaining in the SGL, CSGL account, mostly in the CSGL account with the foreign custodians. And because it is in the CSGL account with the foreign custodians, if they have to offer it for the margin purpose, they have to mandatory transfer it into the CSGL account of the NSCCL or ICCL. When it will, retail participation will happen as per the guideline issued in the budget last month, as well as it was a part of the credit policy in 2014. There will be a seamless transfers of the GSEC from SGL, CSGL to the demat account. So the way two depositories talks with each other, and from one demat account you can transfer to the broker demat account the other depository and vice versa, or the way you can transfer the money from your HDFC bank account to ICICI bank account by the way of RTGS or IMPS or NEFT. And within few minutes the money moves from one account to the other, or securities move from one demat account to other. As a part of the budget policy what has been announced, whereby the retail participation will be allowed on the NDS OM as well as the NSC VAC. There also the movement of the GSEC will happen in the seamless manner. So now FPI will be in the position to hold their government securities in the demat account and can offer it for the margin purpose. So they will not be required to part the securities as they are presently required to do in case of the CSGL account maintained with the custodian. That could be the way whereby their margin requirements can be gone down, and the assets which are presently not earning anything other than the interest what they are presently getting can be used for the multiple purpose. That is what the many world CSDs are offering by the way of collateral highway, where the assets which are given as a collateral in the USA, moment the market goes to the other country as a collateral. So the same assets can be used for the multiple purpose. We discuss about the allotment of the PAN, and it takes 2 weeks. Definitely we have seen the more reduction has happened as far as the time required for the allotment of the PAN. But at the same time, till now we have not got rid away with the requirement that for applying the PAN, KYC documents are required. For doing a FPI registration, the KYC documents are required. And in fact, I will like to just reiterate the move which SEBI has taken a few years back. The way FIS regime got migrated into FPI and the CAT 3, which is nothing but is mostly the family house as he says, or the foreign investors, there used to be the regime like a QFI, which is a qualified foreign investor, which was mostly the CAT 3 what we see now. So there SEBI has come up with the concept jointly with the income tax department that there will be a common form which will be submitted to the custodian for application of the as well as the onboarding the foreign clients through the custodian. So there is no duplication of the KYC document. Both the process will start parallelly and through one single entity. And fortunately, NSDL has a privilege that we are at both the side. For FPI registration also, we have a portal and where the number is generated, and we have a privilege of doing the job of allotment of the PAN card on the behalf of the income tax. So definitely we will be in the better position. One job we are already doing, other is already there, but we can be in the better position to do the integration. So perhaps a day may not be far ahead when the custodian is doing a registration of FPI on our portal. We can have a API call whereby the details will flow to the income tax department and the same KYC document can be onboarded for that purpose. So definitely we will be in the better position to take forward the cost which is presently we see as kind of the hindrance. So I think that could be the better way of taking it forward.
Thanks, Prashant. I think when I didn't touch on those number of guys who got out of the country, when I look at it, it's out of the 10,500 FPIs, only 100 have gone out.
Definitely,
so,
yeah.
100 is not a number, so I didn't give importance to that. But maybe you at some time want to come back with a date by when you will integrate these two systems and we have the PAN coming in 3 days. Okay? So let's work with that. Okay, I'll move on a little faster. And I have a quick question for all of the panelists. What would be useful is also because the panelists represent different factions of, who support FPI. Very quickly, why don't you just touch on some of the initiatives that, each one of you have rolled out in the last 18 months with a view to, facilitate FPIs or, to come into the country?
Well, as lawyers, our preliminary and the biggest role we have is in helping clients with documentation and in structuring their entry as to become FPI eligible. So to that extent, our role has been clarifying a lot of doubts in terms of what is an opaque structure, whether a protected cell company can come in, etc. So yeah, our initiative has been helping our clients with structuring. That's what I'd say.
Thank you, Viraj. As a custodian, we have put together a comprehensive kit which will help any investor, whether Cat 2, Cat 3 or Cat 1. Okay, so he just has to come to us and we will do the entire documentation across the various intermediaries, be it a bank, a broker or a tax consultant. We will act as a one-point contact and to enable him to complete the documentation at a much faster pace so that he can enter India at the earliest. So this makes it easier for him. He doesn't have to run around from one entity to another and fill up various documentation and to complete the process.
At our end, one is that obviously we put together this book. If anybody you would like to be interested, it's a handbook on how foreign portfolio investors need to really access this. What BSE has put together and she has been very kind enough to really print it, so it's all lined on the desk outside. Besides that, two other aspects is, one is on the finance bill, on the budget. We had a day-long conference call with a lot of foreign portfolio investors joining in, with experts in various fields, right from taxation to macroeconomics to the markets, what is the impact, really helping them really unfold what it means for them, the budget, and what are the opportunities which really it poses at each end. But the third most important thing is BSE's philosophy has been transparency, transparency, and transparency. So if you see our website, a lot of information is now available, especially not only for the local investors, but for foreign portfolio investors. And that's not only got to do with what the price movements are, but even with the price sensitive information in terms of the announcements being made. And BSE has been in the forefront and even going a step forward in asking companies where the announcements have not been made in time, putting those questions on the website with the answers. What does that bring for the foreign portfolio investment? It brings in confidence that this is an institution which is neutral, believes in transparency, which believes in the internationally best accepted principles of having information available to all. There should be symmetry, And that, in my opinion, is the biggest piece as an exchange, is what we are committed to, and we continue to grow forward. And the last thing is that the regulator, we have been working with the regulator very closely, and a lot of the other asset classes which have been opened up, whether it be currency derivatives, interest rate derivatives, or the foreign portfolio investments, working with them to kind of simplify the position limits. And that's where we believe we are playing our role in making it easy for a lot of these investors to come in. Because it's not only one asset class which is necessary. And commodities is something which the budget talks about, the commodity derivatives. It's in my opinion, it is not too far where foreign investors are going to be allowed to even trade commodity derivatives.
Quick ones.
So we have generally been working for pre-budget and post-budget sessions. So we have been making, so we know a lot of tax. Sometimes tax is a showstopper for most of the investments and returns. So we worked with government, with CBDT, and including for MAT purposes, we made presentations to the AP Shah committee. So we take up all these issues which are faced by FIIs and take it to the regulator. We take it to the Department of Financial Services at the Ministry of Finance, and we even take it to CBDT, and we try and get some clarifications on that. And we've been doing this along for several years now. So that's a thing which we think is there. Plus we do roadshows outside, so that knowledge sharing which is there, we explain what the tax implications are. And that's where we're actually helping FPIs come into India and understand what the implications are when you're coming into India. And of course, the post-budget sessions also that we do. Once the budget is out, there's so much of discussions happening, and then we give our representations on that to say, what is it that we could have done much better, or what is it that has been done is good. So that's how Deloitte works for it.
As you agree that NSDL is nothing but the facilitator for the custodians to onboard the FPI clients and service them as and when they work, they are associated with the custodian as a client. So basically we don't directly deal with the FPIs, but we are very happy that SEBI has given us a privilege to generate the FPI registration number when the registration details are captured by the custodians on our portal. We generate the certificate, give it to the custodian so that they can give it onward transmission to the FPI clients. As it was brief in the previous session that on our portal we disseminate the information about the debt utilization limits in terms of the GSEC as well as the corporate bond. It was discussed that Masala bond could be the new instrument which will come in the future. It is already mentioned by the RBI that whatever the investment is happening through the Masala bond, it will be forming the part of 21 billion limit associated with the corporate bond limit of the FPI clients. So definitely we will be the entity who will be monitoring that activity, because today already on our website these details are available. When the FPI regime commenced in India, basically prior to that in the FII's regime, every custodian were following a separate undertaking and declaration. Though the KYC guideline was the same, application form was same, this particular document was varies from the custodian to custodian. SEBI requested us that based on their request we standardize the document. So prior to the FPI regime, if a foreign client goes to custodian A, there will be a separate declaration and undertaking which will vary from the other custodian. So their legal team has to go through the various things. Now it is the standardization. Whether you go to custodian 1 or 2, it is the same document which has to be signed and given it to them. When we talk about this particular thing, we have not limited ourselves there only. In fact, I will like to talk about one of the other factors is nothing but the e-voting. SEBI has come up with a guideline that in case of 500 top companies as well as the unlisted companies where more than 1,000 investors are there, in case of postal ballots which are required to be there for passing some resolution, we have given a special facility to the custodians that in one go they can upload the cast the vote on the behalf of their FPI clients. The details of the vote casted by them can be made available event wise, which they can communicate to their FPI clients. So now they are in the better position in terms of disseminating the information which they are working on the behalf of the FPI clients. So we feel that we have made the life of the custodian easier in terms of the various activities they are doing for onboarding as well as handling day-to-day activities of the FPI clients.
Thanks, Prashant. I think the custodians are going home late. It's not because of you, but because probably they got more business. So Vikram, you're listening.
Yeah, for me, for us, it's a short answer. We are a global bank, so we have our counterparts in different countries. So we have been giving them comfort and assurance that yes, it is easy to now come into India, and we give them the confidence that we are there if you need anything to help you out. And plus, we are able to get them to the DDPs who actually issue the registration. In fact, we have in some cases shown them, see the registration certificate, this is issued by this intermediary. We can get a confirmation email back from them saying that this is acceptable. So which actually gives them a lot of confidence to believe what we are saying, rather than the kind of uncertainties which we had earlier. Nothing against the regulator, but in the previous situation, if we had to get a written confirmation on a particular scenario from the regulator, it wouldn't have been possible. Regulators would have their own limitations. So, but what the clients want is in certain form, in a written way, if they get a confirmation about a particular question, they are more than happy to proceed with it. So that kind of ability we have, and we have demonstrated that, and we have been able to at least popularize that through our different offices and different locations when they come up with questions. So that has been the simple process which we have been doing and addressing their queries on how simple or easy it is to get a registration and start investing in India.
Thanks. Just a very quick update from us at Pivot Management. What we've been doing is also sharing with the various intermediaries as well as the Ministry of Finance and SEBI of 5 things we feel will make a big difference in bringing inflows into the country. One is basically, we call it Make India Faster, make India, get the PAN cards up and running fast, make it efficient, because we don't have a concept of custodian banks in this country. And this is the only country in the world where you have custodians, but not custodian banks. So we need this custodian bank concept to be brought into the country, competitive. In fact, I know this is something the bankers would not love it, but if you really want to make investors come into the country, you need to start paying interest, which the regulations do not allow. But 100 basis drop will make the country cheaper by 100 basis points. And maybe that's a path. Informative, we just heard this panelist speak about it. Affordable, also. So these are, in our opinion, 5 reasons. Now, I just, given that we run out of time, because one is the panel had a lot to say, I just want 15 seconds for every one of the speakers. What is one wish list that you would like to see going forward next regulation issue, India summit? What would you want to see happen? 15 seconds starts.
Point is answered already. Understood bonds if they come through, and a little bit more clarity in terms of category 3, which is anyways happening.
Anand.
One wish list is, yes, the documentation has been made much simpler, much faster. This e-PAN and maybe some of the other things as KYC is concerned, that would make it make the investment into India much faster, much larger also. We've already given our recommendations to the SEBI. SEBI is constituted various committees. We've already given our recommendations to them. We hope it comes through fast before the next summit.
I think where I would see would be the International Finance Center is going to be the key driver. So there has to be some arbitrage opportunities between the listed markets and the IFC markets. Because that's where you will see a lot of efficiency coming in between both the sectors. But on one hand, you have a lot of freedom for them to come in and go out without any taxation. But if that arbitrage is not possible, you're going to have very different markets being continued. So I think that linkage is something which I would like.
So basically from tax, I think tax and regulations should talk together. We generally find that tax lags behind what regulation happens. We've seen in ADR, GDR, we've seen in IDR, we've seen in masala bonds. We've seen sometimes tax comes out with certain things at the last moment, like an ICDS. And I don't think FPIs even realize that ICDS could be impacting them. So somewhere I think a lot of knowledge, of course, has to be shared with them, but they also need to realize that certain concepts within India are applicable to them. So it's not only ICDS which is there. A government has been saying for the last 3 years that it's going to come, and then we may have an uproar coming in 2017 March to say, oh, it should not be applicable. So somewhere I think the FPIs also should realize, and somewhere our government also should take a much broader view and should be along with the regulations.
Prior to FPI regime, onboarding the sub-account of the FIs was much easier in terms of the time as well as the KYC requirements were concerned. When we look at the renewal numbers, 80% renewals are coming from the sub-accounts. So definitely these are the entities who are now finding when they are converted from sub-account to the FPIs, they are required to go through the vigorous documentation. In fact, we are very happy that SEBI has set up the committee and which is working jointly for last 6 months, and we expect the report of that to come forward where we will see the more simplification process for the registration of the sub-accounts.
And simply say standardize whatever that you can do and avoid coming up with new norms which we have to go back to the client. We said this earlier, now we want this. So that should be avoided because that's often not well received by the client that we didn't know that this was a requirement. So avoid that. That's it.
Right. Thanks. We've really run out of time. So if the audience can excuse us, we can definitely take in the questions during the tea break. I hope it's fine with you all. Often spent. But I think when I started off as to what is the way forward, what comes to me is let's make the country more predictable and consistency, and that's the way we can increase confidence. So I sort of take your permission to stop at this point, and we'd be happy to take the questions maybe during the tea break. Please go to the panelists because we're just intruding into the time of the next panel. So thank you everybody for making time, and thank you.
Thank you, Viraj, and thank you, panelists. We're going to move, we'll wait for the photo, but then we're going to move very quickly on to the next panel, which will be focusing on high-frequency trading. Okay, can I invite the next guest, please, to the stage? I believe we have Muzammil Patel, who will be moderating the next panel.